Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of GC Power and Industrial Solutions Limited, hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair from DAM Capital Advisors Limited. Thank you, and over to you, ma'am.
Thanks, Rujita. I'd like to welcome you to the CG Power and Industrial Solutions 3Q FY22 earnings call. The management today is being represented by Mr. S. Vellayan, Chairman, Mr. N. Srinivasan, Managing Director, Mr. Sushil Todi, Chief Financial Officer, Mr. Ramesh Kumar, President, Industrial Division, Mr. Mukul Srivastava, President, Power Systems, and Mr. Ranjan Singh, Executive Vice President, Railways. I'll now hand over the call to Mr. Vellayan for his initial remarks, post which we'll open up the floor for Q&A. Over to you, sir.
Actually, Bhumika, we just hand it over to Mr. Srinivasan. Mr. Srinivasan will be driving the call. I'll be here to answer any questions from me, but Mr. Srinivasan will be driving the call.
Okay. Sure, sir.
Okay. So thank you, Vellayan.
Okay.
So good evening, ladies and gentlemen. Let me first extend a warm welcome to you all for this Q3 earnings call. I am Natarajan Srinivasan, Managing Director of the company. I would like to introduce my colleagues who are with me on this call. Mr. Vellayan Subbiah, Chairman of the company, is on this call. Mr. Ramesh Kumar, President, Industrial Division. He is a CG veteran and has been with the company for 31 years and has held various senior positions in the company. He takes care of the motors and drives business. Mukul Srivastava, President, Power Systems. He is also a CG veteran, having spent about 31 years with the company. He is taking care of the transformer and switchgear businesses. Mr. Ranjan Singh is in charge of the Executive Vice President in charge of railway business. Ranjan is also a CG veteran with 28 years service with the company. Sushil Todi, CFO of the company. Sushil has been with the company for about 17 years. So company performance, we have issued a press release on the Q3 performance. While we have given corresponding quarter of last year data, these are not comparable. Since the company at that time was under severe financial stress, we need to build our own performance data from this year onwards. Also, it will take a few more quarters to catch up with the peers as we fully normalize our operations, resolving several legacy issues. So now I come to the Q3 performance, standalone Q3 financial results. The company has shown all-round improvement in performance in Q3, and all the businesses have performed satisfactorily, improving sales and margins. Sales for the quarter was at 1,446 crores, and the profit before tax was at 161 crores, the highest recorded in the last 20 quarters. The company completed the long-pending sale of land at Conjur Marg during this quarter, and the entire sale proceeds, 402 crores, including refund of security deposit of 20 crores, have been received. The proceeds were utilized to prepay a long-term debt of 363 crores. A standalone performance. The aggregate sales for the quarter were higher at 1,446 crores, recording a growth of 106% year-on-year and 7% quarter-on-quarter. Profit before tax, before exceptional items, was at 161 crores, constituting 11.1% of sales, as against 58 crores, constituting 8.3% of sales during previous year same period. On quarter-on-quarter, sales increased by 7% and PBT by 18%. Free cash flow generated during the quarter was about 158 crores. Better sales realization coupled with moderation in input cost helped better margins. So the exceptional income mainly consists of the profit on sale of land of 124 crores, and also a related provision, a provision made relating to the same delay in the conclusion of the transaction, which has been reversed, amounting to about 157 crores, and we also made some provision for 39 crores net. Actually, 242 crores is the exceptional income. Now I move on to segment-wise performance. Industrial systems. Aggregate sales for the quarter were higher at 1,017 crores, recording a growth of 102% year-on-year and 4% quarter-on-quarter. Profit before tax for the quarter was higher at 144 crores with a growth of 91% year-on-year and 18% quarter-on-quarter. Unexecuted order book at the end of December 2021 stood at 1,667 crores. Now I move on to power systems. Aggregate sales for the quarter were higher at 430 crores, recording a growth of 113% year-on-year and 16% quarter-on-quarter. PBT for the quarter was higher at 49 crores with a marginal growth year-on-year and 31% quarter-on-quarter. Unexecuted order book at the end of December 2021 was 1,543 crores. Consolidated Q3 performance. The consolidated results include the performance of the operating subsidiaries at USA, which is called QEI Incorporate, and in Sweden, Germany, and Netherlands, drives and automation business in Europe, and other non-operating and holding subsidiaries. Sales for the quarter were at 1,551 crores as against 820 crores in Q3 of 2021, and profit before tax before exceptional items was at 174 crores against PBT of 64 crores in the corresponding quarter of last year. We mentioned about the prepayment of long-term debt. Post this prepayment of long-term debt, the company stands the debt of the long-term debt of the company stands at 527 crores. Recasting of accounts. The company has since completed the recasting of accounts for the 5-year period from 2014-15 to 2018-19, and then to give effect to the said recast of accounts, the accounts for the financial years 2019-20 and 2020-21. The recast accounts were also audited by an independent firm of chartered accountants, and the audited accounts were taken on record by Honorable NCLT. The recast accounts were certified as true and fair, and the auditors have expressed an unmodified opinion on the said accounts for all the years. The shareholders and investors may be aware that the auditors had earlier expressed a disclaimer on the accounts of the company. The recast of accounts for the financial year 2020 have been circulated. The recast accounts for the financial year 2021 have been circulated to the shareholders to be considered at the AGM of the company convened to be held on 31/1/2022. So with this, I think the entire exercise relating to recast have been completed. Financial statements with detailed notes are available as part of the stock exchange filing and also on the company's website www.cgglobal.com. Between myself and my colleagues, we'll be happy to answer the questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Good evening. Thank you for taking my question. So just first, I have two questions.
Sorry to interrupt you, Mr. Nitin. May I request you to please speak louder?
Yeah. Hi. I'm audible now?
Yes, please go ahead, sir.
Yes, thank you so much. So sir, first question related to the order inflows, especially in the power system segment. And last time also you gave an outlook on the industrial segment also how the end industries are doing. So power system, the order inflow reaching to about 700 crores now. Can you throw some light how the where are the end segments where the order inflow is coming from, and the outlook of your order inflows, or let's say the end market outflow which you have given in the last quarterly calls, if you can throw some light on that. That's my first question. I'll take up the second question after that.
So, Mukul, can you answer this question?
Yes, sir. See, we have been very active in the transmission and distribution sector, as you are aware. and all these segments have recorded a very healthy order flow. If I have to pick up in the order of their growth, I think the power transformer unit has been on the forefront. So many of these orders are going for supply to PGCL, to other utilities, especially for the transmission sector. These are all higher kV ratings, 400 kV, 765 kV, and also a lot of focus and thrust is on the railway supplies. So railway trackside substation for those. This again followed by the medium voltage segment, where the distribution networks in every state is undergoing a lot of revamp. A lot of new substations are being established, and the power to all that motive continues to have focus, and therefore we are doing well in the medium voltage segment. Our distribution transformers, also part of the medium voltage business, is also having a lot of good traction and received many of the orders. So practically all segments from, if you look at the segments in terms of real estate or infrastructure or solar, all segments are working.
And how would you conclude in the investment part? I mean, last time we talked about, that like a sector like irrigation was doing good, pharma was doing good. How does that changing in the end segment in the industrial, and what's the outlook there?
So Mukul?
I'm not able to hear your question.
Yeah, even I'm also not able to hear. Voice is not clear.
Yes.
Okay, I'll try once more. So I'm asking the same outlook on the industrial part. We have been consistent doing order inflows of 1,100 crores. So can you talk about the end market? How is it? Last time we talked about pharma, irrigation is doing very well in terms of getting order inflow. Can you throw some light? What's the outlook now, and which are the segments? Any new segment do you see coming back? On that outlook.
Okay, Ramesh, could you answer this question, please?
Yeah. Actually, like last time, even we said in the Q2, most of the segments are doing well, and they are continuing to do well. And especially the ethanol plants which are coming up now for the 20% blend in petrol by the government target. So that is also helping us in industry growth. Last quarter, overall, if I see that when compared to the Q2, the industry side, the growth has been continued the same as Q2, but only in the agriculture sector as well as the domestic sector has been low after the Diwali festival.
Got it. And so my second question, related to the margins on the power system, as well as on the industrials. Every quarter we are making a new high in these margins on the, especially let's say a power system, doing almost like 12-13% at it. Is there some write backs which are coming up, or the provisions which are getting write back, or do you think it looks like a more sustainable margins now for us? That's it from my side.
So there is no write back in all this actually. But regarding the question on sustainable, I will not be able to commit, because in all these businesses our material cost is close to 70 to 75%. Right. You know how the prices of copper, steel, aluminium, they are all moving. We have no control over that. So actually the margin depends on the material cost, then also selling price, product mix, all the three. Given these variables, it will be very difficult to commit on whether these are sustainable or not.
Okay, why I'm asking this, because despite reporting 29% gross margin, you're doing this number, and I'm assuming the mix is largely would be higher towards power system in this quarter. So despite that, we are doing such numbers. So that's why I'm asking that. Do you think it looks sustainable or not? So all right, I'll come back in the queue for more questions. Thank you.
Does that answer your question, Mr. Nitin?
Yeah, thank you so much. I'll come back in the queue.
Thank you. The next question is from the line of Kirti Jain from Canada HSBC Life. Please go ahead.
Thanks a lot for the opportunity. Sir, congratulations for disruptive and very strong growth which you have delivered. First of all, my congratulations for that, sir, and to the team that they have done an exceedingly wonderful job on the growth. Sir, my question is with regard to our order inflow, sir. We are seeing that our order book has increased from 2,100 crores to 3,100 crores, both divisions put together, which implies an order inflow of more than 2,500 crores. So what is driving such an accelerated order inflow, sir? Like last quarter it was 1,500, this quarter it's 2,500 plus. What are you doing to do such an accelerated growth? If you can give some guidelines, that would be great, sir.
So actually it is only the demand. For example, we have given the total order intake is actually higher in power, higher in industrial, and also in industrial we also got some orders from railways. Railways is on a very big expansion. So our motor business also continue to get good orders. So it's purely demand environment.
Okay. Sir, do you see this momentum broadly sustaining in near term?
So as of now, I think the orders that we have got will keep us in good shape at least for next 6 months, and orders continue to flow. And depends on other aspects like for example, what will be the budget impact, what will be the infrastructure spending, overall economic scenario, which generally I believe will be positive. So therefore, I think this can be sustained.
Okay. Sir, in terms of the new product development and application development, what are the initiatives taken by the company? And also a few lines on our FMEG developments. What are you doing? If you can guide, that would be great, sir.
So it's a very big question. So I don't know how it will be. New product development is there in every business. So for example, railways, it depends on the customer requirements. Similarly, in motors, there will be number of products, number of requirements depending upon the customer requirements. It may be difficult to answer this in the start couple of lines.
Okay, sir. All the best, sir.
Thank you. Thank you.
Thank you. The next question is from the line of Niket Shah from Motilal Oswal Mutual Fund. Please go ahead.
Hi. Thanks for the opportunity and congrats on an exceptional quarter. I have a few questions. So first, I just wanted to understand if you can help us understand within your motors business, how much of your revenues come from IE3, 4 and 5? And do you think that over the next 2 or 3 years, most of the mix will move towards the 4 and 5, which is realization accretive and margin accretive?
So we don't have the breakup, and now we can share that kind of a breakup actually.
But directionally, is it right way to think that if more of I3 moves to 4 and 5, that's realization and margin accretive?
So that is why I'm saying segment-wise, individually for how much margin we are getting for IE3, IE4, we will not be able to share.
Okay, sure. The second question was if you can highlight how large is our exports business currently, given the RM advantage that India has on steel versus other countries. Does it help you to penetrate into export market in a significant way?
So our exports right now are not significant because the local demand, as you know, we are also ramping up the production only sequentially. So we are there. Now this is the 4th quarter that we are in this company. The new management is in the company. Right from Q4 of last year, we have been stepping up our volumes, and as of now, we are just trying to meet the domestic demand. But there are opportunities for exports that probably it will happen in the years ahead. But as of now, our export volumes are very insignificant.
Sure. So the third question was on your B2C strategy. We've seen that you've launched fans and pumps. Should we assume that you will essentially move towards appliances and in that format? So would it be possible for you to share some strategy on B2C as well, how you plan to ramp it up?
So this is a futuristic question. Right now, we have launched, as you know, we have launched fans. So any further appliances, unless we finalize our plans, we may not be able to commit anything.
Sure. So the fourth question was on EV motors. If you can highlight us what's our status on EV motors, and a similar question was also on the BLDC motors. Do we have BLDC motors under our portfolio umbrella today, or do we plan to launch it in future?
So Ramesh, can you answer this question?
Yeah, on EV we are working. Definitely we are there. But the BLDC is only for EV only. As of now, for other applications, there is no BLDC motors which we are manufacturing. So permanent magnet motors, we have started off in a smaller way. For two-wheeler and three-wheeler, we are working right now, and we are also worked for buses earlier. We are definitely there in EV. In a big way, we are going to do it as it will be a future business opportunity for us. That's the additional business opportunity. So that there we will be using the permanent magnet motors, but as of now for other applications there is no BLDC other than the fans. So only BLDC will come into the picture after the BE labeling comes into the effective from 1st July.
Sure. And final question is, if you can highlight at the current existing capacity that you have across businesses, what can be the peak revenues that you can achieve? And also, if you can highlight that, has the raw material inflation hurt your margins in the last quarter, which is reported just now?
So this is for you're asking for industrial division?
No, for the RM part, I'm asking for the overall business. Have you seen, because of raw material inflation, have you seen some impact on margins? Although margins have been very healthy, but would margins be much better if raw material wouldn't have been at the level that we are?
So I think I answered this question earlier. Margins depend on three factors. One is, what is your material sales ratio. Material cost in all our products generally ranges from 65 to 75% depending upon the particular order, number one. Second is, what is the selling price at what point of time you book the order, what is the selling price. And in other businesses, other than industrial, in some of the businesses in power and also in the railway, some businesses may have a price variation clause where you will get compensated. Third is actually the product mix. What kind of a product mix that you have sold during that quarter. So cumulatively, all this will have impact on the margin. Our margins have been better compared to last quarter. So that's all we can say. We will not be able to say exactly, because variables are so much. It will be difficult to pinpoint, how this will play out.
Yeah, and on the revenues part, on the existing capacity, what kind of peak revenues can we generate?
So I think whatever we are currently doing, maybe another 50, depending upon the demand and then also the price factor, etc. We can certainly each business can grow by 15-20% minimum. So beyond that, it will be difficult for me to make any statement.
Sure, sir. I'll come back into it. Thank you for the opportunity.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your question to one per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Hardik Doshi from Whitewell Partners. Please go ahead.
Yeah, thank you for taking the question. Firstly, in terms of, just going back a bit, when you reported your fourth quarter FY21 results, there was an exceptional item of, about 1,076 crore for all of FY21. And in the annual report, it's actually a gain of about 914 crore. So can you just talk a bit about the changes that were there in this reversal, which were mainly from, advances and receivables, but, and what is the status of this in terms of collections and how is it going to impact the balance sheet and cash flow?
So I don't think we can answer this across because, these have to, last FY21 numbers, etc., we have to go into. So maybe you can have a separate call. Maybe if you can give us more details, we can get into this and clarify the question.
The only one thing we can tell you that there is no balance sheet impact at all. All recasting impact have been given. So there is no balance sheet impact at all, even on the cash flow side as well.
Okay. So you think there is not going to be any cash flow impact from this at all?
Not at all. Not at all.
Okay. All right. I'll get back in terms of getting the details. Just one additional question was about the recent acquisition that you've done in the tractor electric vehicle. Can you just talk about the rationale behind it and what is the potential out there?
So we have not done any acquisition. Must be.
Sorry, rescue. Yeah. Okay.
It's okay.
Thank you. The next question is from the line of Bimal Goyal from Union Asset Management. Please go ahead.
Yeah, thank you for the opportunity, sir. So just one order data point I wanted. I guess I missed that. If you could just highlight what is the order intake for power systems and industrial systems this quarter. Order intake. I'm not talking of executed order. I'm talking about order intake, sir.
Order intake for power is 746 crores.
Okay, and industrials?
Industrial 1,222 crores.
Okay, fair enough. Sir, the second one would be on fans and motors. As you've highlighted, these are some of the next-gen businesses that you want to get into. Any timeline as to when can we see the first launch for fans? Are we there in the market yet, or any sort of timelines that you can offer over here?
The fans have already been launched, and then we have already done 5 crores worth of sales when it was launched. Fans have already been launched in 2 places, and then also being sold in other territory also.
Sorry, how much did you say the revenue was?
I think 5 crores was at the time of launch. We booked the sale of 5 crores.
Okay. Any recent number that you would like to offer? I mean, this quarter, how much have you done, or?
I'm not able to get you. What is the question?
How much revenues have come from fans in this particular quarter?
As of now, nothing material, sir, because we just launched the fan in the month of November, so we are just starting that phase. So hardly anything is there as of now in this quarter. So it's not a very material amount in the current sales.
Right. So last question from my side. In terms of your margins, I do understand that there is a lot of variability, in terms of material cost. But just in terms of, overall, because, I mean, in terms of your overall investment and your expectations of your overall capital, return on capital employed, what is the base minimum margin that the company looks at, in order to sort of expect a good amount of, a fair amount of return on capital employed? Because the reason why I'm asking this is over the last 4 quarters, the company has been, giving out fairly decent numbers, and they've been growing over the past 4 quarters despite material cost pressure. So how should we understand this trend?
So I think we cannot commit on any particular number. As you know, the last 3 quarters we have been ramping up production and sales. Our intent will be to at least maintain this margin, but it depends on various other parameters about which I mentioned to you. So it will be difficult for me to put through any number, either on margin or ROCE or anything, because these are all dependent on several other parameters.
Right. Fair enough, sir. I think I'll come back in the queue. Thank you so much, and all the very best.
Thank you. Participants are requested to please limit your questions to 1 per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Renu Baid from IIFL. Please go ahead.
Yeah, hi, good evening, sir. My first question is regarding the power systems profitability. But pardon me if my question is slightly longer. If we see YTD and for the quarter power systems, we have sustained 14% kind of EBITDA margins. This is despite the fact that last 9 months has seen commodity volatility as well as the company ramping up in terms of capacity utilization levels. And broadly, if I see, these are best in the class of margins in the current state amongst peers. So going forward, first want to understand what are the drivers of this outperformance in the power system margins despite the headwinds. Secondly, in the same backdrop, if we see in the last 3 to 4 months or last quarter in specific, CG has been extremely aggressive in the utility market and has quoted for multiple projects below 15% or 20% range versus the L2 players. So in this kind of environment where the company is quoting very aggressively new projects and tenders, can you help us understand what is the strategy? Is it a tactical drop in the prices to garner more inflows and fill up the backlog in the near term? Or strategically, since we have a phase of program which is program lean to cut down the cost structures, are we trying to piggyback on that and cut down the prices so that margins are retained even if we are able to garner higher volumes from the market at lower prices? So we just want to understand both these aspects on the power systems portfolio.
So actually my answer is not going to be different, but anyway you hear it from Mr. Mukul Srivastava. Mukul, can you answer this question?
Yes, sir. I will try, sir. First of all, I'm not sure from where did you gather that we have quoted at multiple tenders with margins below 15%.
I did not say margins 15%. Your average prices in projects have been at least 10-15% lower than the L2 prices.
I don't think
across
so.
multiple. Sure.
No, I don't think so. That data may not be okay because see, our products are custom built. So it is very difficult to put an average standard price for an item and then say that is the comparison with past price or somebody's prices. That may not be correct. So that I think will be my answer for this part. As far as the margins are concerned, yes, of course, as any good company, we are constantly working on various initiatives to improve our designs, reduce the cost, get into lean manufacturing, Six Sigma approach. All the initiatives, almost 20 plus, are being worked on very aggressively. A lot of trust has been given by the new management and people have been trained. So all those actions are resulting into good margin, I will say, reasonable margin, lowering the cost. And this will be our effort in future also, because this journey of excellence never stops. So we'll continue to work on our designs, efficiency, manpower utilization, capacity utilization, everything. We will continue to focus, and let's hope.
So at least there is reasonable amount of confidence on the new order inflows carrying similar or better margins compared to what we have been reporting so far.
We have a defined structure of how do we make a quotation based upon various parameters. And there is a hierarchy, there is an approval matrix based upon the margins. So we do very strictly follow that. And based upon those aspects, we do quote. And having quoted, definitely as any company, we will also have a task cut out for various teams in HCM, in manufacturing, in quality assurance or in design to ensure that we do improve our design so that the margins are protected.
Get it. And if I can ask one question on the railway portfolio, can you just share a brief update in terms of how large is the railway portfolio today in the current scheme of things? And how has the market share moved? Because last 2 years, I would understand there would be some shrinkage of market share in the railway product portfolio. So where are we today in terms of broad revenue, maybe for the last fiscal or for the last 9 months? And how large is the backlog and how are we looking to ramp up our presence and portfolio in this business? Thank you.
So Ranjan?
Hello.
Mr. Ranjan?
Yeah. Thanks for the question. The railway portfolio is a mix of both products coming from industry as well as the power segment. While transformers and all go from the power segment, and the motors and converters and all, they go from the industrial segment. And from the market share perspective, I think we are at a level of about 90 to 20% market share in the various segments that we are, where number of players are also quite high, ranging from 4 to 5 competitors who are major players, and that's how it has been in all the segments, whether it is transformers, motors, or converters.
So any insight on the size of the portfolio?
We don't share separate details on railways, other than only industrials we are reporting as a segment.
Not a problem, sir. Thanks much and all the best.
Yeah, thank you.
Thank you. The next question is from the line of Vipul Lamba from Lamba Investments. Please go ahead.
Hi, thanks for taking my question. Can you let us know about the utilization in both these segments, industrial and power?
So in terms of capacity utilization, are you asking?
Yeah.
No, power, I think, different products. So definitely we are in the range of between 50 to 60% today. In terms of the industrial side, we are at around 70 to 80%.
Okay. And in power segment, how much is our solar contribution, and how does the future prospects look like?
We don't share that individual data. You are asking about the solar contribution, right?
Yeah.
No, I don't think so that we share individual product-wise data. So it's coming under the product power system only.
And how is the future prospect do you see in that?
Mukul, could you just give an overview?
Can you please repeat your question? Are you asking about the solar segment or the power segment?
Yeah. Yes, in solar segment.
Okay. In solar segment, we have various products. These products from distribution transformer to switchgears and our HV switchgear all go into the solar segment. Solar is doing well. As you know that a lot of solar power plants are coming. And apart from our existing portfolio of the products, we are also working on other areas which are required by the solar segments.
Okay. Thank you.
Thank you. The next question is from the line of Suraj Navandar from Sampada Investments. Please go ahead.
Yeah, hi sir. Just a small question, sir. What would be our timeline to execute the remaining order book?
No, this order book will be executed over next to 6 to 8 months.
Okay, and those questions have been answered already, sir. Thank you, and all the best.
Thank you. The next question is from the line of Amit Mahawar from Edelweiss. Please go ahead.
Thank you. So I have two basic questions. First is largely on if you see our business portfolio across industrials and power systems, we have a lot of industry transition going on. So how should one think about businesses in the industrial vertical that will stay in CG Power or some of the businesses that we will enter in the other groups of businesses? How should one look at a long-term industrial portfolio of CG Power? My question is more because I focused on take example of EV value chain. We will focus on EV motors. You have EV charging infrastructure also. So can you give a broad landscape of how should one assume and imagine long-term business focuses in CG portfolio? That's my first question, sir.
So I think in industrial right now is consist of motors, drives, plus railways. These all the products, whatever we are manufacturing, will continue to manufacture as adjusted or modified for the customer requirement or market requirements. Now, earlier there was a question on EV, and then Mr. Ramesh Kumar replied that we are certainly working on that. So whatever opportunities are there relatable in adjacencies, certainly we will be there. So you asked about EV charging. That is also maybe, we can't commit actually unless something is finalized. Every opportunity is being examined. So I don't know whether I've answered your question.
No, I think partly maybe my question was more, or maybe even if Mr. Velan wants to answer if he's on the call still. Between two of you, sir, my question is more to understand within the group. How should one imagine where is CG portfolio moving in the long run? Where is other group entity industrial portfolio moving? It was more around which businesses will take care of which segment, because as businesses transition, you might have product overlap, that can happen. That was my specific target, sir.
Sure. I'll take your question. See, I think if you look at our portfolio, it's shaping up fairly well. Directionally in TI, we've kind of talked about, kind of our interest in electric vehicles and all of that, which means that's going to be an OEM perspective. But if you take electric vehicles, what CG has talked about in their portfolio over time is looking at, EV motors. Somebody earlier asked a question about, beginning to work with permanent magnets more. So basically, we see CG becoming more a tier one supplier in that space, being basically a provider of motors and controllers and perhaps kind of power electronics also to do with the whole EV segment. Because obviously, kind of anything in the power electronics goes solely in CG's domain. Similarly, in railways, kind of anything to do with the locomotive is going to be housed in CG. And CG is kind of naturally is a natural owner because it has much larger and much broader relationships in the railway business. So broadly, the way and obviously we've also stated our consumer intent, and that it started off with fans and all that. So that's obviously kind of more fans and pumps, and that's naturally housed in CG as well. So we don't see too much conflict between the two. There's definitely opportunity for supplier relationships in multiple places. So if you see what's happening overall, we think that electric vehicles in India will continue to be geared. So Shanti Gears being another subsidiary of PI is a logical provider of that. You see the OEM capability being housed in PI, and all of the like we said, all of the power capabilities being housed in CG. Is that clear?
Very helpful, sir. Thank you very much. Second and last question is on the entire power equipment portfolio. Now, if we see the market, maybe around next 5 to 8 years, you have a huge bunching up of high technology oriented transmission equipment business that is going to be around STATCOM, SVC, HVDC, or compliant gas-based products. And also, if you see overall electrification market, we are seeing a significant shift towards low voltage. That's what all the global capital allocation of companies tell us. Whether it's ABB exiting the grids business or some other players consolidating their medium voltage, low voltage presence. My question is more around across your group entities. We have had a position of strength across businesses. Now in power systems, what is your long-term vision, sir? I just wanted to understand directionally, how do you see your power segment business? Thank you.
MS, you can.
So I think Mukul will answer this question.
Right. See, as you rightly said, that the power system is a little bit of the higher technology side business, and that things change or evolve very fast. I mean, although it may look like a segment which have equipment serving for 35, 40 years, but constantly the upgradation keeps happening. Now, in CG, we are trying to keep up the pace, especially in terms of developing green products, which are non-greenhouse products as far aware. So that is one of the areas which we are focusing. Apart from that, automation, SCADA, which makes everybody's life easier, fast access to data across the continents. Those technologies also we are developing. HVDC is one area we are still evaluating, but we hope to come back with an answer shortly. And apart from that, these applications, these equipments have to be utilized in various segments like nuclear power plants, power quality measurement, transport, traction, e-mobility. All these industries require the same bulk of the equipment, but some customization. So we are also working on those areas, and wherever we have small gaps, we are trying to cover up them either by internal development or acquiring the technology.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead. The next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead. As there is no response from the line, we'll move to the next question, which is from the line of Vignesh Shankar from Artha 99. Please go ahead.
Hi, thanks for taking my question. This is more specific to the motors, especially the BLDC motors that we spoke about. Considering that BLDC motor has got 99% dependence on raw materials from China, are we looking at alternating our motor play along with maybe a switch reluctance motor, other motors, or our long-term strategy to stick with BLDC motors?
Ramesh?
Yeah. Actually, we are not using any BLDC motor for any industrial application. BLDC is generally used in a very small motors, that is particularly in automotive industry.
Exactly. Considering the EV play, I wanted to ask this. Sorry.
Yeah, in EV, yes, people are working on how to avoid magnet as far as EV motors are concerned, but that's going to be a very long term strategy, because currently all the motors which are across the world used by the EV are permanent magnet motors, which is made out of rare earths, and dependence on China is there. So that is the reason across the globe many people are working on how to avoid magnet going forward in EV business, because depending on the magnet will be very high. So that will be a long-term strategy, and we are also following the same strategy for how we can convert our PMSM motors to the other technologies.
Thank you.
Thank you. The next question is from the line of Bimal Goyal from Union Asset Management. Please go ahead.
Sir, my question was more macro in nature. Given the fact that you've consistently sort of delivered very high growth in both your segments, just wanted to get a sense on the overall private capex. How are you seeing that? And there have been some talks of slowdown that we are hearing of. Do you see that on the ground at this point in time? And if I were to just sort of try to break up your revenue, how much of it would be coming in from market share gains, and how much of it would be actually coming in from the market itself sort of growing? If you can help us explain that. Thanks.
So it depends on products to products. See, which segment you are asking? You are asking about industrial or power?
Yeah, my question actually more towards industrial, which typically depends on more private capex.
So Ramesh, could you answer that question?
Yeah. See, the industrial, I can tell you, NIMA published the data for industrial, especially ultimate and large industrial machines. So we follow the data. So if you compare, the data available is up to September only actually. So if you compare the September growth as per NIMA, the market has grown by 100%. We have grown by 140%. So you can say that while we managed to get more than the market growth, so that is from the gain from the market share as well as the realization more because of the commodity price. But we are much above the market growth. In large industrial machine also, if you see that market is grown by 32%, we have grown by 43%.
Sorry, I just missed. In September, the 100% growth was in which segment? If you can just highlight that once again.
This is for LT motors, where we have grown by 140%. I'm talking about quantity, not the value growth.
Right. Any outlook you want to, not on the company, but any outlook you want to probably offer on these on this particular segment, the market outlook? I mean, I'm not asking for company specific guidance, but any outlook that you would want to share, medium term outlook on these segments?
So Ramesh, the industry growth motor, can we say about 6%, 5%?
It is anticipated maybe about 7 to 8% going forward. Maybe slightly more with respect to large industrial machine, because the industry and water and wastewater is doing well. It should be approximately that what we are anticipating next year. Maybe little more than the GDP growth.
Right. Fair enough. So thank you so much, and all the very best once again. Thank you.
Thank you. The next question is from the line of Renu Baid from IIFL. Please go ahead.
Yeah, hi. Thank you for the opportunity. I have 2 or 3 bookkeeping questions. First, if you can share with us what is the consolidated gross debt and net debt on books at the end of the December quarter?
Consolidated?
Gross debt and net debt.
So how do you define net debt?
Okay. Gross debt or total borrowings and total cash and equivalent. We'll calculate the net debt.
Okay, so you can note down.
Yeah.
Debt at India level we have a 531 crore.
Yes.
And net debt is almost nil.
Got it. Second question is on the industrial systems. What was the quantum of pricing actions that we took during the third quarter? We had mentioned at the end of 2Q that price hikes are planned. So if you can quantify what was the quantum of average price hike we announced in the market, and are there any further price hikes planned in the fourth quarter or end of 4Q, early 1Q because of the commodity inflation that we are seeing?
Ramesh?
Yeah. So whatever, if you see up to quarter two, maybe up to, I can say October, the raw material inflation is almost about 42% plus. So we have also increased our prices in the market to almost close to that percentage. But if you see the commodity have softened from November onwards. In fact, the steel is slightly reduced this quarter, that is in going forward in the fourth quarter. So I don't see any more price increase is given into the market unless otherwise there is again if some disruption comes into the copper or aluminum or steel.
Sure. And thirdly, what was the ESOP charge that we have recognized in P&L in the third quarter, as in we had issued ESOPs to the senior management team at CG? So what would be the provisioning which is booked in the P&L?
Yeah. So that is approximate around 60 lakhs to 70 lakhs.
Got it. And lastly, there was somebody earlier who had asked one similar question. I'll put it out in a different way. From a long-term perspective, maybe from 3 to 5 years, are there any plans to carve out the power systems portfolio into or demerge it or sell it off at a later date, or it would continue to be retained as a core business portfolio within CG? Because relatively, as a business, it's a working capital intensive and again a bid-based driven project, relatively different from the typical industrial solutions business which we have.
No, we cannot answer this question because it's first of all we have not done any work like that. Secondly, these questions cannot be done individually. These are all it has to be debated. It has to go to the board. The chairman will have to take a view. Group will have to take a view. Several issues. We are in this company less than 1 year.
Not a problem. And closing, if I can ask one small thing on the industrial solutions, Mr. Ramesh had earlier mentioned that while industrial core businesses remained flattish like 2Q, but there was some signs of slowdown post the festive season in the domestic and the agri market. So if you can comment or elaborate a little more in terms of the slowdown, is it just a seasonal impact which is there, or actually in the end markets, are we seeing certain pockets of the market slowing down because of a number of issues, inflation or anything else?
No, it is basically because of the rains we have seen this year, extended rain season. Rains were there up to November in the most of the places. Scattered, unexpected heavy rains were there. So we thought that it is only because of that, and we are very optimistic that it will revive. It is nothing to do with the inflation or any other.
Got it. Thanks so much for all your inputs and insights. Thank you and all the best.
Yeah.
Thank you. The next question is from the line of Harshit Kapadia from Elara Capital. Please go ahead.
Thanks for giving me the opportunity. I just have one question. What are your CapEx plans for this next fiscal year, and which segment are you looking to expand capacity?
So next fiscal we are just working it out. We have not finalized. So it will take some time for us to decide. So definitely there will be some capex. Exact number, we cannot be able to finalize. So definitely because all the plants require modernization. We have not much capex was incurred in the last 3-4 years. So we will have to modernize various facilities, and in the modernization and automation will bring in some kind of automatically some expansion of capacity. But it's too early to say. We have not finalized that number.
Fair enough, sir. Thank you for the opportunity. Yeah. I wish you all the best.
Thank you. The next question is from the line of Nagraj Chandrasekhar from Laburnum. Please go ahead.
Yes. Question. Mr. Ramesh talked about growth in LT motors and heavy industry growth if prices are stable, being
around 7% and slightly higher in heavier equipment. Could you break this down by the rest of our portfolio of the size? I'm not talking about areas like FY22, where we're going from a very small base, only motors, controllers, BLDC motors, where again, these are new products going from a small base, but the large products segment, what should industry look for each of these broadly?
I've not heard your question correctly.
Yeah.
You're asking industry growth. What is it? What is the question?
Industry growth, like Mr. mentioned for.
Voice is breaking. Interrupt you, Mr. Nagaraj, but your voice is breaking. We cannot hear you.
Hi, my question is on industry growth for other large product segments, just like Mr. Ramesh Kumar mentioned for healthy motors and heavy equipment in 7% and slightly higher. What would these be for the other parts of our portfolio, be they HT motors, be they switchgears, transformers? Just want to get a sense of industry growth in the next 3 to 5 years in your view for these segments, for these industries.
So 3 to 5 years, very difficult to take a call. We'll not be able to say, especially for all the products, it will be very difficult to take a call.
No, very broadly, there would be a range of 0 to 5 in some
credibility, the statement. I can say 7%, 8%, 10%. If you ask me what is the source, it will be difficult to say. So I think we cannot attempt to answer that question.
So you can expect the GDP growth, whatever that's there, so that India next 3 to 5 years, how that GDP is going to grow.
Okay, so that should be broadly the volume growth for our portfolio as a whole.
Take it like this.
Got it. Thank you.
Yeah.
Thank you. The next question is from the line of from Union Asset Management. Please go ahead.
Yeah, thank you for the follow-up once again, sir. So just wanted your comment. You said that you have basically covered for the entire inflation, commodity inflation of 40%, and you've taken the price hikes for which are similar. Does that mean that as and when commodities sort of normalize, you will have to reverse your price hikes going forward, and that could probably one possible headwind going ahead?
So I think this is fundamentally, when the prices drop, then market prices will drop. When the market prices drop, you have to drop your price. Otherwise, you will not be able to sell. As simple as that.
Got it, sir. Got it. And mostly when you talk about 40% hike increase in prices, that would be mostly in the industrial segment, or has the power segment also price hikes by your company?
So the commodity prices for all the segments are the same. Power has got whatever materials, copper, steel, special steel, etc. Prices certainly go up. Power sector, if you see, most of them are tender driven. Therefore, some will have as I said, some will have a price variation clause. Therefore, future prices will be protected. And it is up to you to take a call, up to what extent of the MSR. We simply go by the material cost to sales price ratio. So if it is not comfortable, then you don't take that order. That is how we work.
Right. Fair enough, sir. Thank you so much for the clarity. Thank you. All the best.
Thank you. The next question is from the line of Rajesh from Janmay Venture. Please go ahead.
Thank you. Good evening, gentlemen, and congrats for very strong numbers. Mr. Vellayan, if I recollect rightly, post acquisition of CGP by Cube Investments, you had given a broad range guidance of about 500 crores PBT in 4-5 years or something like that. And you will end up probably achieving that very easily this year itself, the very first year. So would you care to give some guidance over the next 3-4 years or on margin?
No, I think let us go through. See, basically we've not, the first, obviously we were making an estimate, when we acquired the company, and that was the estimate that I gave you. Now my suggestion is you let us kind of go through a more detailed effort where we come up with a long-term strategy and we have numbers that we feel confident of achieving over the next 3 to 4 years. And then we'll come up with a new set of guidance that we can give you at that stage. But we've not gone through that yet. Okay? We're just going through a regular budgeting process right now. We've not gone through that process.
Okay, wonderful. And on the softer aspects of the business, when you acquired, obviously there were various issues in the companies, and they would relate to people management, motivation level and other things. Would you care to share some of those? How is the situation now post almost a year of you taking the reign? How is the sort of motivation level and the culture in the company? How has that changed or is being changed?
So rather than I answer that, I'll have the team on the ground kind of answer. And maybe we can have both the division heads' perspective and the MD's perspective on that. Obviously, we think that things are quite a bit better than it was last year. Ines, do you want to should we let the division heads talk first, and then you can also give your perspective?
Sure, yeah. So Ramesh, few minutes, then Mukul, and then Ranjan. All of you can say a few minutes on this.
Yeah. I mean, definitely, things are much better now. People are very, very confident that they are with the big group like Murugappa, and the things are also happening very fast. And whether the company recovery or legacy issues are being solved very fast, so that is why people are very confident, and the motivation levels are very, very high now in the organization.
Interesting.
So Mukul?
Yes, sir. Once the new management of Murugappa have taken over, I think a sense of calmness prevailed, where everybody felt secured that the company is going to run. So I think that sort of job security, I think, propels people to give their best. And seeing the earlier shock of 2 years, which was keeping people on the edge, once that thing was gone, everybody felt reasonably secure, motivated. And on the work front, everybody wants to now contribute and give their best. There is respect in the market now. Customers are happy to accept us back. And CG as a company has always been one of the company which is Indian company which brings down the technology at an affordable rate to customers and providing long-term solutions. So I think to that extent, when the customers welcome you, you are secured in your job, everybody feels motivated.
Mr. Ranjan?
Yeah. The new management has taken the leap of faith of taking the company forward with insulation of the business from the travels of the external environment, which had affected the business in the last 3-4 years. This helped the business, which had its own core strength of its team. The people have been handling the customers, the frontline people, the people who are work on the shop floor, the people who are on the development side. All of them were just looking for the support, and they have taken it so well in the short possible time that they have been able to connect with the customers back, winning back the orders, and with the guidance of LP and the trust on new directions like on the lean and movement for efficiency and project-based management, we have been working together in a close-knit team, which has helped us both in terms of the top-line growth as well as in bringing efficiency in our operations.
So I think you have heard from the CG veterans, but I am an outsider. During the last maybe 1.5 years, I have met with the executives, workmen, union, customers, vendors across, and whenever at various points of time, generally the overall view has been extremely positive. And as far as the employees are concerned, they were very keen to just bring back the company to its old glory, and there was a passion with every one of them, I could see. And they responded. Whenever we gave any opportunity, they responded, and the proof is actually in the performance. But for a very positive, vibrant and attitude, this would not have been possible across the company, across segment, from all stakeholders.
The person you are speaking with has put your call on hold. Please stay on the line.
Wonderful. NS, that was, and all the other gentlemen, that was very, very useful insight. Wish you all the very best for more.
Yeah, thank you.
Thank you, Mr. Vellayan, as well.
Thank you. Ladies and gentlemen, this was the last question for today. I will now like to hand the conference over to Ms. Bhumika Nair for closing comments.
Chalo.
Hello? I think line got disconnected. It's there, yeah. Bhumika?
Management, would you like to give any closing remarks?
No, so I think we have answered all the questions, If there is nothing else, I think thanks for the participation.
Thank you.
Yeah.
On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.